Right. How are you all? Happy Sunday to you. Today's April 2nd. Wanted to have a chat, talk about the subject at hand that is all over the internet, YouTube. All of the search engines are spitting out one subject in particular. Um, we're also going to piggyback off of a recent question that we received from our student Ryan in yesterday's Saturday Zoom class about the CBDC, the centralized banking digital currency. So I got some notes here that I wrote, and I'm going to share this with you guys. Those that are in Patreon, you'll be able to have access to these notes and refer back to it. It can be used as a guide, kind of give you an oversight as to what you're going to be doing in the near future with your trust and all of the businesses that you guys have put together. What do you do with the money? So let's go over it because we have to really start to understand if you're going to ask the question CBDC, what does that look like for us in the world? And are they going to control us? Is there any way? If you're going to start asking those questions, you really have to understand the inception of the United States and what the document says certain entities can do when it comes to money, when it comes to currency. So let's take a look because we're going to dive into public and private. It's so important. Public and private, the debt, deficit, things of that nature. Let me share my screen here. I think this is very, very important to understand. All right. So, like I said, these notes here will be inside of the Patreon in the links down below so that you can download it and have it with you. Pass it on to your friends if you like. So let's read CBDCs and the collapse of the Silicon Valley Bank. Question on everybody's mind: what will happen with the people's money who had an account with Silicon Valley with amounts over 250,000? That is federally insured up to 250,000. Is it lost or is it transferred? It's a good question because let's say you had a business account and you're operating a business where you have to pay your employees. You certainly need more than $250,000 to do your business operations. So, is everything lost above that number? Well, the thing is it's not lost. It's it is transferred. Whatever you had in the bank at the time, and if that bank had went belly up, your funds, your monies was transferred to another bank that can obviously sustain it and absorb its liabilities and assets, just like JP Morgan did with Marsh Washington Mutual in 2008. So what about the future? Okay, what about the future? Is this new central banking digital currency, is it leading to total control over my money? Are there any actual pros or cons? Do I have to use it? I think that's the big question. Do I have to use this thing? Can I use something else? That's the question that we'll answer in the end. So there are different types of currencies out there that are currently in operation with several countries. Bitcoin is being the most trusted right now, but the central banking digital currency, it is the most talked about subject right now. So there are many differences between Bitcoin and CBDC, such as number one, the issuer. Bitcoin is decentralized and has no central issuer, while CBDC is issued by the central bank of a country. The country that I'm in, or continent, the Union of United States of America, that would be the Federal Reserve System. They are going to be the ones issuing CBDCs. DC, and they're trying to tell people that, hey, you do not need to worry about the things that have happened with Silicon Valley Bank. We don't have any type of liquidity issues because we can just what digitize the money, and there is enough to go around. Versus, this fractional reserve system that we have, the banks don't have that much cash on them inside of the bank. They don't. Most of the monies is digitized. If you were to walk into a bank and say, look, I have $1 million and I want to take it out right now, they'll tell you that we can't do it. There's just not enough on hand to do it. I've actually witnessed that. So this CBDC is to give you some sort of comfort and security from volatility. Number two, the backing. Bitcoin is not backed by any government or central authority, while CBDC is backed by the central bank of a country. Number three, the supply. The supply of Bitcoin is limited to 21 million coins, while the supply of CBDC is determined by the central bank, meaning there's no interchangeable cash, and the Federal Reserve can simply create more and more and more without the result of inflation or transferring the inflation to other countries if all countries are centralized. Number four, price volatility. The price of Bitcoin can be highly volatile, while the value of CBDC is more stable as it is backed by the central bank. So there again, they're talking about you can trust us. You don't have to worry about your monies being lost. Number five, the regulation. Bitcoin is largely unregulated, while CBDC will be subject to regulations by the central bank. So overall, while both Bitcoin and CBDC are digital currencies, they have different characteristics and serve different purposes. Bitcoin is primarily used as a store of value and medium of exchange outside the traditional financial system, while CBDC is designed to enhance the efficiency and security of the existing financial system. Okay, that's the story that they're spilling. That's what they're telling. Now, everyone is talking about this US dollar crashing or the US de-dollarization. This is all fear-mongering, panic, manipulation, and it's wordplay. Because a dollar crash means completely worthless and you no longer are able to use or accept it, like in Venezuela. De-dollarization means to substitute one form of currency for another that will more streamline and be controlled against other countries. So it substitutes US dollars for trading oil and other commodities, for example, the petrodollar. And they're going to trade oil or other commodities for foreign exchange reserves using bilateral trade agreements. So in all of the news outlets today, you're seeing many different leaders around the world in different countries. They're coming together, they're signing these bilateral agreements. So that way, country A, their centralized bank, can merge and operate with country B's centralized bank. There is no longer going to be one lording over the other. That's what they're trying to do. What most people do not realize is the public debt limit is capped at 14.2 trillion. And this is per Title 31 of the United States Code, Section 31 0.01. Let's take a look at that. It says here, Section B, the face amount of obligations issued under this chapter and the face amount of obligations whose principal and interest are guaranteed by the United States government, except guaranteed obligations held by the Secretary of the Treasury, may not be more than $14.294 trillion. Okay. It cannot be more than that, outstanding at one time, subject to changes periodically made in the amount as provided by law through the congressional budget process described in Rule such and such of the Rules of the House of Representatives. Now, what's interesting, it says that they cannot go above and beyond this, right? But you take a look at the national debt clock and look at where we are. 31 trillion, over double or over half, right? Half of 14 trillion would be 28 trillion. We went over that. And so now that we've gone over half, they're talking about, let's figure out a way to clean house, get rid of inflation if they can. But ultimately, this is an act of control, and you'll see exactly why. So the debt limit is 14.2 trillion, which we clearly are over. This would explain why the Federal Reserve System has instituted a lien against all United States citizens in the amount of exactly 14 trillion. They did this on July 15, 2011, after they reevaluated everything from the 2008 crash. If you were to take a look, we go to, let's see, I believe it's Investopedia. Let's see. Did I keep that up? If you go to Investopedia, they'll tell you how much the debt was back in 2010. 2010, it was 10 trillion. And they increased it to 14 trillion in 1411. Now we're clearly over that. Let's take a look at the lien. This lien here was done by the Federal Reserve System. In box 10 on this financing statement, and by the way, if you don't know, a financing statement is how you record liens or a presumption of a lien. I'll get to that in a minute. In box 10, it says, with this note is legal tender. Now, why did they put the words with in brackets? Brackets is the lawful contractual four-corner rule. It means as if the word with is not on the page at all. It's a contract, so it's protecting whatever the with is referring to. And the with is referring to the United States Treasury. Okay, so this note is legal tender for all debts, public and private. $14 trillion. You scroll down here. U.S. Department of Defense, Finance and Accounting Services, right? It says all real men with hands and legs and all real land and assets in the United States of America, 14 trillion. With trust in God, this real estate is with the public. I was actually going to say republic, but notice that the word republic is not here. It is just the word public. This is pertaining to the public debt. They have means and intent and intentions to only further increase this $14 trillion debt by circulating Federal Reserve notes. We know that because it says this note is legal tender for all debts, public and private, And they're talking about the notes that says that. Just take a quick look at a $1 bill. Zoom in there. This note is legal tender for all debts, public and private. And here we see that four-corner rule, because at the bottom here, you have the Treasurer of the United States, and on this side, you have the Secretary of Treasury. Two different entities. The word Federal Reserve Note is in a black box. That is the four-corner brackets. Everything else is pertaining to the United States Treasury. That's how they protect themselves. Now, this note is dual-sided. It has a dual nature. It means that you can spend this as we normally do, and that will continuously increase this $14 trillion debt. But if we were to simply take this dollar and exchange it at the post office, because the post office, the Postmaster General, is connected to the United States Treasury, there is an account. And if we were to exchange this or use our debit card or credit card in return for a money order, it would allow us to circulate our very own Treasury notes, the notes that existed before 1913. And on those Treasury notes, we would write specific restrictive endorsements on there that used to be on the notes that were circulated before 1913. That would reduce this national public debt clock. They would reduce it drastically. I'll get to that in a second, but let's go back to our notes. So, $14 trillion lien is against all U.S. citizens who are here using that. It's backed by the Social Security number. That Social Security number is considered old age insurance. The Social Security Administration tells you that. And if you use it, you are partaking in bond activity for the benefit and privileges of the United States. Okay. So the most important thing to note is, well, before I read that, I want to go back to the Federal Reserve website, see what they're talking about when it comes to the CBDC. And this was posted November 4th last year, 2022. It says, while the Federal Reserve has made no decisions on whether to pursue or implement a central bank digital currency, or CBDC, we have been exploring the potential benefits and risk of CBDCs from a variety of angles, including through technological research and experimentation. Our key focus is on whether, let me read that again. Our key focus is on whether and how a CBDC could improve on an already safe and efficient U.S. domestic payments system. So it says CBDC is generally defined as a digital liability of a central bank that is widely available to the general public. Today in the United States, Federal Reserve notes, physical currency, are the only type of central bank money available to the general public. So if Federal Reserve notes, these are the only type of central bank money available to the public, and if today they're talking about issuing these CBDCs, that means they're going to get rid of the physical currency. That's it. It's just a replacement. Getting rid of one thing for another. But it does not necessarily mean that the United States is going to lose its power. North America will always be home base because it is the Mecca of the Moroccan Empire. Let's not forget the empire of Al-Marak, who started this entire thing all around the world. It will always be the power. This is the land of the milk and honey. We continue reading. Like existing forms of money, a CBDC would enable the general public to make digital payments. As a liability of the Federal Reserve, however, a CBDC would be the safest digital asset available to the general public with no associated credit or liquidity risk. Notice they keep on saying the general public, to the general public. They're not talking about the private citizens. What are they going to use? Something else. What are the owners of the Federal Reserve going to use? They will never, ever, ever get rid of the black market, because if they do that, then what are they going to use? They're going to be right here with the general public. They can't make you stay in the general public. Now, they can create scenarios to make you think that there is no other way. You just need to know your founding documents to know what the other way is going to be. It says the Federal Reserve Board has issued a discussion paper that examines the pros and cons of a potential U.S. CBDC. As part of this process, we sought public feedback on a range of topics. See, they need your feedback to let them know, do we have enough people under our control and belief to issue this thing and launch it? This was back in 2022. Now let's check out what's happening today in the supposed year of 2023. This is March 15. Today is April 2nd. So a couple of weeks ago, this was released. The Federal Reserve announces July launch for the FedNow Service. This service will debut or begin with financial institutions and the United States Treasury on board. Chicago. All right, this is the Chicago Bank. There are 12. The Federal Reserve announced that the FedNow service will start operating in July and provided details on preparations for launch. The first week in April, the Federal Reserve will begin the formal certification of participants, aka Chase Bank, Wells Fargo, Bank of America, all of them, Ally Bank, Capital One, all of these are considered participants for the launch of the service. So they're calling this CBDC rollout FedNow Service, right? Early adopters will complete a customer testing and certification program informed by feedback from the FedNow pilot program to prepare for sending live transactions through the system. Certification encompasses a comprehensive testing curriculum with defined expectations for operational readiness and network experience. In June, the Federal Reserve and certified participants will conduct production validation activities to confirm readiness for the July launch. We couldn't be more excited about the forthcoming FedNow launch, which will enable every participating financial institution, the smallest to the largest, and from all corners of the country, to offer a modern instant payment solution. As if our payment solution was a problem. If I send money from here to, let's say, another country, what would it take? Like 1 to 2 days? I'm not complaining, and neither is the recipient. So they're going to use that as a pro to push CBDC. This was said by Ken Montgomery, He was the first vice president of the Federal Reserve Bank of Boston and FedNow program executive. With the launch drawing near, we urge financial institutions and their industry partners to move full steam ahead with preparations to join the FedNow service. Many early adopters have declared their intent to begin using the service in July, including a diverse mix of financial institutions of all services, the largest processors, and the U.S. Treasury. In addition to preparing early adopters for the July launch, the Federal Reserve continues to engage a range of financial institutions and service providers to complete the testing and certification program and implement the service throughout 2023 and beyond. So this is going to take a while going into 2024. I had told people, if you're planning on buying a house right now, wait until at least Q2, second quarter of 2024, when all this stuff goes down and relaxes and chills for a little bit. If you really want to buy a house that way, wait. You don't have to buy it right now. Montgomery noted that availability of the service is just the beginning, and growing the network of participating financial institutions will be key to increasing the availability of instant payments for consumers and businesses across the country. All right. The FedNow service will launch with a robust set of core clearing and settlement functionality and value-added features. More features and enhancements will be added in future releases to continue supporting safety, resiliency, and innovation in the industry as the FedNow network expands in the coming years. So this is not going to be a quick rollout. It's going to be a gradual thing. You know that you guys are already used to this thing. Apple Wallet, Google Wallet, Cash App, Zelle, Venmo, and so many others out there. In fact, other countries like Colombia has a gazillion different types of resources and sources to make a transaction. All of that is CBDC. That's all that is. Let's continue here. With the FedNow service, the Federal Reserve is creating a leading edge payment system that is resilient, adaptive, and accessible, said Tom Barkin, president of the Federal Reserve Bank of Richmond. It's always them saying this is better. And FedNow program executive sponsor. I'm going to show you how they're not telling you the whole truth and the whole truth, because the whole truth will set you free. The launch reflects an important milestone in the journey to help financial institutions serve customer needs for instant payments to better support nearly every aspect of our economy. They don't even want to touch the fact that when you print a dollar, there's interest attached to it, as if that should be the motivating factor for another form of currency. But the only thing that they want to use here to promote this currency is it's faster, it's better, it's resilient, it's adaptable. Okay. About the Fed service now, the Federal Reserve banks are developing the FedNow service to facilitate nationwide reach of instant payment services by financial institutions, regardless of size or geographic location, around the clock every day of the year. Through financial institutions participating in the FedNow service, businesses and individuals will be able to send and receive, here we go again, instant payments at any time of the day. And recipients will have full access to funds immediately. So guess what happens when you have the ability to have funds immediately? That means you have the ability to immediately lose your funds just by the push of a button. Gone. Access will be provided through the Federal Reserve's FedLine network, which serves more than 10,000 financial institutions directly or through their agents. All right. So they're going to do it. So as of November 2022, they said, no, we're not going to go there. All of a sudden, December, January, February, March, 4 months later, you're ready to push something out. How do you make that big of a decision in just 4 months? This was planned going all the way back to Bush Jr., the Iraq invasion of the oil, and the other guy in, what was it, Libya? They took him out. And Hussein. All right. Let's continue back to the notes. So I was right here. The most important thing to note in this United States Treasury is the United States Treasury is the private side of the US dollar and the Federal Reserve Bank, aka or also the IRS. The Federal Reserve Bank and the IRS is the public side of the US dollar. Before 1913, all Treasury notes had the phrase redeemed in lawful money on demand at the US Treasury or any bank or any Federal Reserve Bank. You could actually exchange your $20 Treasury note for a $20 face value gold coin. After the enactment of the Federal Reserve Bank, which is 1913, but they started operating in 1914, the banks began to say, the notes began to say, this note is legal tender for all debts, public and private. I showed you guys that, which means we have always had the power to control the debt ceiling. We would either receive Federal Reserve notes in exchange as is, or by using debit cards or credit cards, money orders, or checks. The problem is none of those methods of exchange provide a restrictive endorsement as it was before 1913. This here is a restrictive endorsement. So what we should have done is this. If we were to receive Federal Reserve notes, right, cash, and then exchange it for gold, silver, palladium, copper, or go to the post office and get a money order, or go to the bank and get a money order, a cashier's check, or just our regular checks with our regular checking accounts, and then write that restrictive endorsement on those, it would kill, I mean, demolish the fractional reserve banking system, because we would start to circulate those everywhere. If I got a money order from the post office, right? I gave him cash and he gave me a money order for $100. And then I write in the memo section here, this information. But let's say pay to the order of Target Corporation. And I make sure I get everything I need, $100 worth. And let's say there's change left over. If there's a shortage of change and he can't give me my dollar and something change, he or she, whoever is the teller, they're just going to give it to me in one of their Walmart, what are those, Walmart cash cards, right? And I can easily just transfer that money to my bank and take it out later. But what would happen when the register takes that money order? She's going to put it in her drawer, and whoever she needs to send it to, the cash or money service department or whatever in Walmart or Target, and they're going to deposit it into their bank account. But it's going to stop that bank from entering it in the computer 10 times that amount or whatever fractional reserve that they want to do. So therefore, They can't create more public interest. They can't do it if they receive notes that have these writings on here. This was our responsibility at all times, and it still is. This is what we were supposed to do. So it would prevent inflation and it would destroy the public debt. And it's not tedious. It's not hard. Buy a stamp and do it. This is responsibility. Why would we destroy the very thing that we work for when it comes to our labor? We destroy it just for convenience and going to the store and using quick money. And therefore, the dollar loses its power every day, depreciating. That's your fault. We got to do our part. The power will never be removed from the people and never be in the hands of the Federal Reserve Bank unless we give it to them. So let's read from their own words. If you guys click these links here when you download the file, you'll be able to go to these sites that I'm showing you here. So this is the Federal Reserve talking about currency and coin services. Let's go down to currency, because that's what the CBDCs are trying to replace. Each year, the Federal Reserve Board determines the number of new Federal Reserve notes that are needed to meet the public's demand and submits a print order to the Treasury's Bureau of Engraving and Imprinting. The order reflects the board's assessment of the expected growth rates for payments of currency to and receipts of currency from circulation. The Federal Reserve pays the BEP the cost of printing new currency and arranges and pays the cost of transporting the currency from the BEP facilities in Washington, D.C. and Fort Worth, Texas, to Reserve Bank cash offices. In other words, they transfer it from Washington, D.C. or Fort Worth, Texas to all of the participating financial institutions everywhere, which is approximately 8,400, as you see above. When a depository institution orders currency from a reserve bank, the Reserve Bank prepares and releases the shipment to an armored carrier. When a depository institution deposits currency with a reserve bank, the Reserve Bank stores the currency in secure vaults until it is verified, note by note, on sophisticated processing equipment. During the piece verification process, currency is counted, suspect counterfeit notes are identified, and unfit notes are destroyed. The fit currency is packaged and returned to the vault and is used to fill future orders from depository institutions. The reserve banks send all suspect counterfeit notes to the United States Secret Service for examination and final adjudication. All right, here we go. More than 99% of all U.S. currency in circulation is in the form of Federal Reserve notes. The remainder includes United States notes, national bank notes, and silver certificates, all of which remain legal tender. Did you see that? They're telling you that you can use something else other than this at Walmart, at Target, at the beauty supply store, at the dealerships. You do not have to continue to use that. You can use United States notes, national bank notes. What are those? Let's check it out. Let's look at this here. This is Liberty Coin Service. Now, these are old. They don't make these anymore, right? These old ones. So of course, they're going to have a high premium price, but we're just going to check it out for right now. Look at this. This is a secured, it's $5 face value, secured by United States bonds or other securities by the United States of America. It says what is that? The only National Bank of Hartford. Let's flip it over. There's only one in stock. If you want it, go get it. I'm going to try to read this wording down below. But notice how there's no Federal Reserve on here. Nothing. And you can use this to spend $5. Would I do it? I would never spend this if I bought it. I'd pass this on because this is going to go up in value. Can you imagine that? Paper money is going up in value just like gold and silver. It says this note is receivable at par in all parts of the United States in payment of all taxes and excises and all other dues to the United States except duties on imports and also for all salaries and other debts and demands owing by the United States to individuals, corporations, and associations within the United States except interest on public debt. There you go. This is a national banknote. There is no interest on it. So when you actually use this thing in commerce and they deposit it, eventually the note will make it to the bank. They cannot say, oh, here's a $5 note. Let's go ahead and type in $50 in our assets and liabilities. They won't be able to do that. But they can do that with the Federal Reserve note. They can do that with your check. They can do that with your direct deposit from your job. Why? Because you didn't write on the check, redeemed in lawful money at the U.S. Treasury on demand, right? You didn't write that on there. So they took your entire check of, let's say, $5,000 this month, and they just entered 10 times the amount. And that's increasing the national debt. So what happens when they type that amount in the computer, but there's only 5,000 on hand right now. There's only 5,000 in cash on hand, but they entered 10 times the amount. And so their vault says that they have 50,000 in there, and you go in there and say, okay, let me get 50,000. Oh, we don't have it. Do you see why you can't walk into the bank and just pull $1 million out? They don't have it. This would stop that. What else do they say we can use? They said United States notes and silver certificates, right? Check this one out. This one is $2.99. I'm sorry, but these look amazing. So cool. $50. See the back of it. And then we'll move on. $50. It's got nothing to do with the Federal Reserve. These are still legal tender. This is the private market. They can afford to exchange these things between themselves. That's what the private is doing. They showed you in John Wick, right? They showed you in John Wick. What do they only use? They only use these coins, private coins. They never exchange it at Walmart, Target, or whatever. They keep it within. And that's how they're able to operate within their own contract. This stuff is actually real, believe it or not. They're showing you real stuff on the big screen. And go see Chapter 4. That was a great movie. All right, let's continue. So if we go back to where we left off, they said you can use United States notes, national bank notes, silver certificates, all of which remain legal tender. The other, which is all of that, is 1% of what's in circulation. The other 99% is to the general public as Federal Reserve notes. So the 1%, the ones that are not being taxed, are using this. Do you see how the 1%ers avoid tax? They don't get paid in this. You can't tax a silver certificate. It just said on the very back of the note, no interest. You can't collect taxes on that. The other thing it's not mentioning here is coins. Let's go down. Coin. The Federal Reserve role in coin operations is more limited than its role in currency operations. That was a big one. I'll read it again. The Federal Reserve's role in coin operations is more limited than its role in currency operation. It spits out Federal Reserve notes more than it prints or mints coin. Here we go. So when people tell you real lawful money is gold and silver, that's half true. Half true. Gold and silver is a precious metal, but can you take it to Target and use it? Nope. You can only give it to somebody who wants to take it. A private merchant. So what else can you use that's considered lawful money? Remember that court case that's on the Federal Reserve website, Malam versus the Federal Reserve or the United States, where they told him the dollar bill, this is a lawful note because it's dual-sided. On the public side, it's a Federal Reserve note, and on the private side, it's a Treasury note. It's just going to take more of these to buy actual gold. That's all. Okay, so the Federal Reserve, they do not have the power to coin money. They have the power to print currency. That's all they deal in. They can just print currency. Now, rolling into the CBDC, what are they doing? It's closely tied to Bitcoin and the Bitcoin mining. So are they mining for gold and silver? No. But are they mining for digital currency? Yes. So who's responsible for actually mining metals and coining coins? That would be the United States Treasury. It says, as the issuing authority for coins, the United States Mint determines annual coin production. The reserve banks, however, influence the process by providing the mint with monthly coin orders and a 12-month rolling coin order forecast. The mint transports the coin from its production facilities in Philadelphia, aka Marrakesh, the same Philadelphia in the Bible, and Denver to all of the reserve banks and the reserve banks' coin terminal locations. So why don't you just go to the coin terminal locations to get your money? When they told you there's a shortage of coins, we can't give them to you, well, why don't you just go to the source where they get it themselves? The reserve bank coin terminal locations. How do you do that? You can do it. Let's see here. All you do is Google reserve banks or Google coin terminal locations. I'll do it with you. right? Then you scroll down and you see that you have to find how to search for them. It says right here, for more information regarding the coin terminal program, please contact your servicing Federal Reserve Bank. Click on that and type in the routing number to the bank that you operate in. Mine's Wells Fargo. If I plug that in, it's going to give me the executive director that I can email or call and find out when they're going to get their next shipment of coins. And then I would just simply go in there, knowing that the money that's in my checking or trust enterprise checking account that's under CBCDs, and tell them, look, I got 50 million of CBDCs in there, and I want you to give me 2,000 coins today, because I know you just received them because you told me to come on this day. I just got paid my monthly paycheck of $6,000, which is converted to CBDC to the bank account. Okay, I'm going to take out all of it in coins. Thank you very much. Here's my scheduled date. That's all you have to do. If you don't want to go that route, go to the US Mint directly. Why? Because when you look at the Constitution, right? If you look at the Constitution, go to Article 1, which we already are in. Check this out. It says the Constitution was written in 1787, ratified in 1788, and in operation since 1789. The United States Constitution is the world's largest surviving written charter of government. Its first 3 words, "We the people," affirm that the government of the United States exists to serve its citizens, right? Now, check it out. Written in 1787, ratified 1788, operating in 1789. What happened in these 3 years? I told you, do not forget what the North American continent is. Before it was the United States of America, it was British America. And before it was that, it was the Barbary states of Colorado, the Barbary states of Nevada, the Barbary states of such and such. And then you had the island of California, right? With this whole new reconstruction, they filled in those gaps and merged California with Nevada and Arizona with salt and land and mud. You can look that up. Now, what happened in these 3 years? What was here before the United States of America? How did it begin? Look at the Articles of Association in 1774, which led to what? The Declaration of Independence, 1776, which led to what? The Articles of Confederation, 1781, which led to what? The United States Constitution as a more perfect union in 1787. So check this out. This is a letter that you can find on founders.archives.gov. This is the letter from George Washington to the Sultan who's on the land, Sidi Muhammad, 1789. And look at what he's talking about here. It says, since the date of the letter, which the late Congress, by their president, addressed to your Imperial Majesty, the United States of America have thought proper to change their government and to institute a new one that's going from the Republic to the new one, the Democratic. The Democratic is the one that has all of those amendments. That's considered bills of attainders, ex post facto laws, right? Because it comes after the Constitution. 1787 didn't have all that. It says, to change their government and to institute a new one, agreeable to the Constitution. See, they're in 1789, agreeable to the 1787 Constitution, the Republic, of which I have the honor of herewith enclosing a copy. The time necessarily employed in this arduous task and the derangements occasioned by so great, though peaceable, a revolution. That means they took it over by the stroke of a pen. The pen is mightier than the sword instead of bloodshed. Will apologize and account for your majesties not having received those regular advices and marks of attention from the United States. You see, the Department of Agriculture had to pay tribute to the Sultan, and he's apologizing that they didn't get a chance to send them any money. The reason why is they're saying, look, all of our slaves are gone. They spread out. We can't collect from them. We don't have nothing to give you. But we'll make it up to you. We promise. That's what George is saying. Which the friendship and magnanimity, I can't even speak, which the friendship and magnanimity of your conduct towards them afforded reason to expect. The United States having unanimously appointed me to the supreme executive authority in this nation. That means he's the president. Your Majesty's letter of the 17th August of 1788, which by reason of the dissolution of the late government remained unanswered, has been delivered to me. I have also received the letters which your Imperial Majesty has been so kind as to write in favor of the United States to the Bashals of Tunis and Tripoli. See, Tunis and Tripoli, if you look now, you'll find that over in the continent of Africa. But remember, all that stuff was here in North America. They just moved it. If you read the tablets of Thoth, you'll see that they moved what was over here over to the east, right? The east of the United States of America, which is Africa. That's where the sun rises over there. Bashals are a title of nobility, just like the L's, the Bays, the Alis, the Dukes, the Marquis. And actually, the Marquis was mentioned inside of the John Wick chapter 4. He was the main villain. Tunis and Tripoli, and I represent you, and I present to you the sincere acknowledgments and thanks of the United States for this important mark of your friendship for them. So he's saying that the treaty is what gave them the immunity and amnesty to do what they're doing today. It says, we greatly regret that the hostile disposition of those regencies towards this nation who have never injured them is not to be removed on terms in our power to comply with. Within our territories, there are no mines, either of gold or silver. And this young nation, just recovering from the waste and desolation of a long war. I want to stop it right there. If you check out the book, right, the book is called Ancient Mystic Oriental Masonry, and it sheds light on this long-awaited war. All right, let's see here. Zoom in for you. It's going to talk about that time that George Washington is mentioning, because he's writing in 1789. What is that? The tail end of the 17th century. right, so here we go. I'm going to read point number 6 and 7. It says, in America, rediscovered in the 15th century and repopulated in the 17th, was recovered Egypt and the Promised Land, or the land of the constellation of the Eagle. So I mentioned Al-Morocc, right? The Empire of Morocco being in the Americas. That was ancient Egypt, ancient Tartaria, ancient Atlantis as well. Number 7, no matter how numerous or complicated the works of a lock may be, if but the right key be applied, the Great Pyramid proves to be the long-sought key to the mysteries at once of mythology and of the great world religions. Especially interesting is it to Americans in this year of the Columbian celebration of the 400th anniversary of the rediscovery of America, to see it demonstrated that the cosmic terrors interwoven from the very warp of woof and woof of all sacred literature, Christian and pagan, refer to the occurrences as literally true as the earthquake of Lisbon. These stupendous events being connected primarily with a great destruction and recovery of equilibrium in the solar system. And secondly, with the consequent wrecking of the continent of America when the globe became involved in the consequences of the disorder of the skies. All right. Now, there was a catastrophe that took place. That is what George Washington is talking about here. All right, saying that the land was recovering from waste and desolation, not only just from a long war, but something else rent this entire land asunder. All right, so let's go back. So I want to show you, we understand that this is what has happened between 1787, 1789, and 88 and 89. Within a 3-year span, something took place, which gave George Washington the go-ahead to say, look, we need to reconvene and reconstruct. We need a new thing. And so that's how it's been happening ever since 1789. So if you go down to Article 1 and then Section 8, everything is Section 8, Title 8 for the Immigration Act, and then Section 8 for, people who are on Section 8. If you go to Section 8 in the Constitution, look at what it's talking about. It says the Congress shall have the power to lay and collect taxes, dues, imposts, and exercises to pay the debts and provide for the common defense and general welfare of the United States. But all duties, imposts, and excises shall be uniform throughout the United States. So this is where taxes are illegal. They're not uniform. It's all depending on the certain amount that you bring in. That can't be the case. The only thing that's uniform is tobacco and alcohol. Everybody pays a generic tax for that if you purchase it. And they're saying that it's supposed to be that way when it comes to income. But income is nowhere in here. It's only in the amendments, beginning with that 14th Amendment. That's the root of it there. But let's continue. It says Congress has the power to not only do that, but they have power to do what? To borrow money on the credit of the United States. Borrow money on who? You, the people, with that old age insurance number. And you are the credit of the United States. That's why in our authentication process, it says in the document that it has been annexed, right? The securities in there have been annexed. It's now in limbo, and it needs to go to the trust. So that way the trust can do this. Very same thing. We'll be getting into how to do that. What else do they have the power to do? They have the power, and this is the most important part of this entire conversation here, to coin money, regulate the value thereof, and a foreign coin, and fix the standard of weights and measures. The Congress of the United States of America not only can coin money here and regulate the value of it, but they can also do it in all other countries. United States will never, ever, ever lose their power. This is the seat. The Empire State Building is it. That's why it's called New York, right? So what I'm saying here is you got to get some coins. The coins is your alternative to this system. You got to get the coin, and you still will be able to utilize postal money orders and write that restrictive endorsement on there to protect you. Okay. If I were to go to US Mint right now, the United States Mint.gov, and I want to get some coins that were not highly inflated by the premium prices, I can come here directly to the source. Let's see. Let me buy Native American $1 coins. Denomination, $1. Let's check this one out. So they're selling here 2023 mint, a whole bag, for $117. I can get 100 gold coin dollars. Now, of course, it's not pure. Of course, not pure gold. There's other metals mixed in there. But $17 premium is not bad. What I'm saying is this right here, I can use as tender. I can go to any store and give them this, and they will go ahead and give me whatever services that I'm asking for. So let me go ahead and add this to my cart, and I'll be back to shop here and get some other things. The Federal Reserve is saying that they're no longer going to print paper currency. Well, they never did do it. The United States Treasury did it. And I can go here and get the dollars if I wanted to. You can buy them this way. 20 sheets, 20 note sheets, $1 each for $43. And look where they're coming from. Washington, D.C. and Fort Worth, Texas, as we read in the law or the Federal Reserve website. So you can still get them upon order if they stop circulating it, right? Let's continue. Now, I talked about life insurance. Life insurance is a good thing to do as well. I want to read an article to you guys about life insurance. This website is paradigmlife.net. And they're talking about how life insurance can help you avoid that inflation. So let's look at an example. Protecting your money against inflation. It says, if you ever win the lottery or 401k or deposit from a loved one when they passed away, like from their insurance policy, and you're offered a lump sum payout versus a steady stream of income payments over a period of years, always take the lump sum. Every day that goes by makes the value of each of your dollars less and less due to inflation, not to mention the lost opportunity cost by not investing your winnings from day one. Inflation affects every dollar you ever owned, and its effect is especially pronounced on the dollars you try to save. The money in your savings account loses value the longer it sits waiting to be spent. Your financial planner will remind you to factor for inflation when it comes to funding your retirement, and to factor for taxes, which add even more unpredictability to your 401k or IRA. If you buy term life insurance, your beneficiary will not receive as much of a death benefit as you originally purchased. If you purchase a 30-year term life insurance policy with a $1 million death benefit and die near the end of your term policy, given a 3% inflation rate per year, your death benefit will only have the spending power of $411,987 in today's dollars. In order to pass on the equivalent of $1 million in spending power to your beneficiary, you will need a death benefit of $2.4 million. If you died in year 31, your term policy would be expired. Your beneficiary would get nothing. See, that's term life. I don't like term life at all. However, if you have purchased whole life insurance instead of term, the death benefit of your policy would have continued to grow based on guaranteed interest and non-guaranteed dividends, averaging 4 to 6% per year. At this rate, your death benefit would outpace inflation, ensuring your beneficiary receives the full value and spending power your death benefit intended. When you factor in the cost of buying additional term life insurance coverage to keep up with inflation and rising premiums when you add coverage at a later date, assuming you qualify, you may be better off buying a whole life insurance policy instead. Yep. Whole life insurance policies offer the best of both worlds. Whole life insurance policies earn cash value through interest and dividends. This capital is liquid and can be used at any time. However, the cash value of your policy continues to grow even when you are borrowing against it with a policy loan. In this way, each dollar of cash value works twice as hard to combat inflation. Let's talk about this policy loan for a second. It says you're able to take out a cash value of your policy in the form of a loan. We know that the IRS does not charge taxes on loans. So let's say that I have a plan where I deposit $100,000 a year for 10 years, and then I don't have to do it anymore. At the 10-year mark, I would have what? $1 million of cash value plus accrued interest if I didn't touch it over that 10 years. So I got $1 million plus the interest. So let's say I got $1.2 million of cash value. And I want to retire. I want to live off that. What I would do is take out a portion. Let's say I want to give myself a budget of $70,000 a year. Now, mind you, just because I retired doesn't mean I stopped making money. You just retire from the employee world, but you never, ever, ever stop making money. That's how the brain dies and you get old quick. You got to stay sharp. So I continue making money. And I want to live and just have all my day-to-day bills equate to $70,000 a year, mortgage, all of that stuff, whatever I have. And I'm also including and factoring in the payment to this policy loan. So I take out 70,000. And throughout the year, I spend the 70,000. From that 70,000, $400 per month is going towards the policy loan to pay it back. I'm just paying myself back. What's also cool about this is if I didn't pay anything back and I just took out the money, the interest is still accruing as if I never took it out, right? So by the time I make all my payments for 12 months, obviously the 70,000 isn't paid off, but I'm still making money and I'm depositing whatever I want in the policy loan year after year up until it's not an issue when it comes to the modified endowment contract rules, right? So I can easily just continuously deposit 70,000 and more to pay that loan off. And then when it comes to taxes, my trust, because it is the beneficiary of the policy, my trust will file the taxes on that. And whatever I spent throughout the year from that 70,000, whatever was business expenses or whatever I spent, if whatever I can get that's deductible to an entity that doesn't have to pay taxes from the very beginning, that money will come back in the form of a refund. Do you see how that works? That's why I like whole life better. So I would get a whole life insurance policy if I were anyone. I recommend it. We always recommend IBC Global. There's another gentleman on YouTube that you look up. He's a young guy, really good. Denzel Rodriguez. He has spoken with Steve Parisi on the IBC Global Incorporated. So they know the business of infinite banking. They know how to do that. I highly recommend you set a whole life insurance policy up. Now, you can always take out money from that cash value and guess what? Go buy your coins. Buy your coins, keep a couple of rows on you, dollar coins, and that way you can use that. You don't have to use CBDC. You don't have to use it. All right. So obviously, the Federal Reserve and the International Monetary Fund have a plan to control your way of life with the CBDC. There would be no more cash, just debit credit cards with the chip, Apple, Google Wallet, Zelle, Venmo, Cash App, and others. But the real method of control for this digital currency would be that it's regulated, like the California EBT project office, right? There's a lot of people that are using that. So let's see, if I were to go to the EBT project and I check out their FAQs, here's one of the questions I was inquiring about. If I don't use all of the benefits I received this month, will these benefits still be available to me next month? For now, they say the answer is yes. Benefits that are not used in the month issued will stay in your EBT account, and you may use these benefits in the following months. So as of now, you can basically save what they give you. Let's say it's $200 a month, and you don't spend it. It would roll over into next month, and now you have $400 on that card. That's just right now. Go up. Look at this question. Will I be able to use my EBT card in any country or county or state? It says yes. However, you are required to report any address change to your local county public assistance office. You must live in California to be eligible to receive benefits from a California county. To protect your benefits against fraud, your Golden State Advantage card cannot be used to withdraw cash at an ATM in these states and cities. See, they're already getting them used to not using the card to get cash. Mark my words, the very first people who are going to have who will be subject to these CBDCs heavily are going to be those that are who are former inmates and on probation and they can't find work. That's what's going to happen. So you use your credits or lose it, like accrued time from employee vacation time. If you don't use your vacation time, they don't accrue it. Some employers, some. I know state jobs do that, but it will be just like that. And like I said, they will first roll this out for inmates who are on probation and cannot find work. They will receive a card connected to a participating FedNow service, allowing them so many credits per month and when and where they can spend it. If they violate the probation rules, the banks just shut the account off. Easy done, easy peasy. So in that form of thinking, you're thinking, well, I can't do anything. You just have to operate in the private. So what is the solution to all of this? What's the solution? Number one, set up your foreign express trust, use a foreign trustee, and remove that $14 trillion lien off your back by registering your trust in any court of record, followed by a non-uniform commercial code filing system that references your promissory note lien that the trust has against your vessel of the United States, which is the name registered with the Social Security Office, or if you are naturalized, the USCIS. All right, so you got to get that set up. Second thing is to set up your estate and reclassify the estate to the Foreign Express Trust. You have to do that every 7 years under the Bankruptcy Insolvency Act. And that stems from the Biblical Jubilee Treaty, right? Third, you want to set up your domestic trust enterprise at any Federal Reserve bank so you can continue your day-to-day banking. Day-to-day banking, bills, that's about it. Purchase food, gas, utilities, but your savings needs to be in that life insurance policy, or you need to go and purchase the United States Mint coins. All the way from dollars to nickels to dimes, they still will coin that money. That's never going to stop. It will never stop. The Federal Reserve note, that's something different. That's going away. But the coin is what the Congress has power to do domestically and internationally. Number four, you need to set up that whole life insurance policy and make the beneficiary the Foreign Express Trust. I know you're asking, well, if the trust is the beneficiary, then how do my children benefit from the money when I die? You simply need to set up a fiduciary. I recommend selecting someone that's neutral to the family. And I use a trust corporation or a trust company. And they are instructed that when I pass, I have given trust certificate units to son 1, son 2, son 3, wife, and a few other family members, including unincorporated associations or other businesses that I've created. And when I pass, the money will go directly to the fiduciary. He's the fiduciary of the trust, and he is supposed to dish out or distribute the monies to whomever is the holder of those units. And there's a certain way that I have them prove who they are. I'm not going to make it easy just because you hold that note or unit. And there's certain rules that they have to apply to and do to make sure that they qualify to receive that money. You don't want to just create trust fund babies who have no idea what to do with it. Otherwise, what's the purpose of this hard work that we do now and today? Okay, so you want to set up that where the trust is the beneficiary of the life insurance policy. You must use your Social Security number as the insured. If you are a foreigner, just use your visa. Okay. As we have read, You will overcome the inflation rates and maintain the value of your labor for savings and wealth passed on to your family and friends. Now, monies that are used for everyday spending can be in the form of US mint coins with a very small premium cost. Coins can be used as legal tender. It is the one thing that will continue to be available even in the event the US dollar crash, even if there's a US dollar crash society, which most likely is going to come very soon. Majority of the world will use the CBDC out of ignorance and convenience, but just know that you can use United States silver certificates, national banknotes, and United States notes. It can still be used as legal tender. The United States dollar crash, it only pertains to the Federal Reserve note, not the United States of America and Congress assembled power. Okay? The United States is the only one that has Navy, Army, Air Force, Marines, National Guard. That power is not going to be surrendered. No other country has a unit like that. All right. So you can use CBDC in the public occasionally, but if you want to operate and maintain your freedom in the private, circulating coin will decrease the national public debt, including those money orders, cashier's checks, and regular checks the way that we showed you here. You have to put that restrictive endorsement on there. And so that is going to reduce the national public debt. But with more coins in circulation, over time, people will use it as if it's the common thing again. One last thing to note. This book here, The State of Coin, go down to page 12. Remember where there was a time where there were signs all over in every single store, bank, where they talked about shortage of coins. Saying, sorry, please use card. Look at this right here. This is coming from the banks. This is coming from the Federal Reserve. That was a lie. Here we go. Not a shortage. In the early days on the pandemic, when coin issues initially began to surface, members of the public, the media, and some retailers referred to this problem as a coin shortage. Contrary to numerous coin shortage signs displayed in stores across the country, this is not a supply issue that can easily be resolved by simply producing more coin. In 2019, the United States Mint's production of new coin accounted for only 17% of the coins that the Federal Reserve paid into circulation, while recirculated coins made up the balance. In addition, according to the United States Treasury, that there is more than 48 billion in coin already in circulation. So when they tell you we have a coin shortage, please use your card, why didn't they just say, look, if you want to come in here and pay for things, stop using your card, use whatever change that you have in your car, in your jars at home, use that to help us. But instead they said, no, leave that. We don't want it. We just want to wait this out and see if the government is going to print more coins or mint more coins. Use your card, use your chip. You see the plan? It says economic and behavioral changes resulting from the COVID-19 pandemic, as well as shifting business and consumer payment preferences and decisions, suggest most of these coins are sitting dormant inside of America's 128 million households. As people have changed their spending habits in response to the pandemic, and certain intensive businesses and commercial bank branch locations have been less accessible. Many suspect the nation's coin may be pooling in change jars, in car cup holders, and in shuttered businesses, making it difficult for the business of this country to get the coin that they need to support cash transactions. The power has always been with us. 48 billion in coin just not circulating. So the answer to CBCD, circulate the coin. That's all you got to do. Convert your cash, your dollars into coin and use it. Get your money orders, put the restrictive endorsement on there and use it. Heck, use some national bank notes, silver notes, United States notes. The Treasury is not going to stop printing those. They still do, current ones. The older ones are more rare. They're going to have a higher premium on them, but you can get them and circulate them. You do not have to be subject to the public. You can still operate within the private. All right, that's going to be it for this video. Any help with the process, it can be found on the step-by-step online process at patreon.com. The link will be in the description down below. Please join us. We'd like to speak with you on the first Saturday of every month, and our private clients speak on the 15th of every month. Please join us. I think you and your family will appreciate the information for generations to come. All right. what is that? Central, oh my goodness, go all the way back. Centralized banking digital currency. Don't need it, don't want it. See you guys later.